The S&P 500, the Dow Jones, and the Nasdaq are all down since the beginning of the year. Many experts have predicted a huge market crash for 2022. And now the infamous Mate Kevin has sold his entire $20 million portfolio because he didn't want to buy the dip.
Here we go, come on, push it, buy the dip, here we go, come on, push it, oh my god, what's happening?
So what should you do next? As the great Warren Buffett said, it is almost impossible to time the market right. Since many days now, the stock market is taking a full beating, and on Monday, the 24th January, it faced its worst day since the big crash of 2020. Its current volatility and the fear of the investor are currently at its highest. So is it only an obstacle on the road of wealth or only the beginning? So in this video, I will share with you what is my own opinion on what's going on the market, and I will share with you what I am doing presently to protect myself from going crazy. There are many factors that are making people fearing a recession. First, there is the supply chain problems that affects mainly different sectors in our economy. For example, on the food sector, it makes that, for example, there is more demand compared to the supply that is available. So basically, it just boosts the price of the food, which make it even less affordable. And this also boosts the inflation that is currently at its highest point, around 7%. Also, there is the political tension between Russia and Ukraine that might have a huge impact on the world. And obviously, the biggest threat is the fear of the rising interest rates. And the rise in the interest rates is to be able to face the high inflation at the moment. So the Fed will have some important decision to make in the next months, and it's why people are anticipate a lot the rise. But it could also affect the housing market because, for example, if the rates are increasing, it could potentially crash the price of the houses, for example, and make that people that have some mortgage will pay more interest than the mortgage itself. The stock market is also a reflection of all the future anticipation of the investor on the market, which means that presently they are fearing the raise of the interest. However, here in Canada, for example, and it's the same for the US, the rates are still the same as the beginning of the pandemic, so they haven't been increased yet, but still the people are anticipating some increase in those rates. Normally those increases will come around March and April, so basically at the end of the first quarter of 2022. So we will see there if, for example, the government decide to increase the rate like crazy animals, or if they're going to be more defensive on the increase of the rates. And this is the approach that I see them doing because they don't want to make a crash, so they will really aim just increase the rates slowly by slowly. And presently we are still in the market correction between 10 and 19%, which usually happen each 16 months. If we were to go between 20 and 39% of correction, we would be in a bear market, and this usually happens between 7 to 10 years. And finally, if we want to face the real crash, we would need to be lower than 40% to face what is called a real crash, so real stock market crash, which happened only 4 times in the past 125 years. As you can see, the big crash and the bear market are not happening often. Many experts like Ray Dalio and Michael Burry throughout 2015, 2016, 2017, 2018 all predicted a market crash. However, no one can predict what is the future of the stock market as anything in life, or someone would be so rich if they could be able to predict the future, trust me. But if you're fearing all the opportunities that you have in life and that you don't try to make a move, you will always stay static. And as Franklin Roosevelt was saying,
in a moment of decision, the best thing you can do is the right thing to do, the next best thing is the wrong thing, and the worst thing you can do is nothing.
Now, to illustrate this concept, let's take the situation of Matt and Daniel. For the last 40 years, both Daniel and Matt have invested $500 per month in an S&P 500 index fund, but they have both different strategies to invest. So first, you have Daniel that doesn't want to invest at the top of the market, so he buys the dip. He saves up a lot of cash and he sits on a lot of cash until the market is at least 10% down, and after he will try to buy. On the upper end, you have Matt that doesn't have the patience to do this kind of strategy, and he just regularly invests every and each month. Let's see now whose strategy is the best. Daniel, the dip buyer, with his strategy over the last 40 years to wait for a 10% or more dip, has been able to accumulate more than $2.8 million. And for Matt, the monthly buyer, with his patience and his consistency, he has been able to accumulate more than $800,000 of more than Daniel, with a total of $3.6 million. The conclusion is that the market is usually going up, so leaving too much cash on the sidelines might not be the best idea if you want to really enjoy all the growth in the stock market. This story doesn't mean that you need to sleep on a lot of cash, or even don't use any cash and don't keep any cash. Personally, I'm really in between. Like, I'm not selling all my portfolio, but I'm not keeping only 0% of cash. What I am usually doing, and honestly, this is really the beauty of finance. You have many different approach to the problem that we are facing now. Some people just keep like 50% of cash and are waiting for like the best opportunities. Some others are keeping no cash and just always buying everything. When they receive cash, they are just straight buying. So there is a plenty of opportunities. I think that trying to time the market is not the best option in my point of view. What I'm doing usually is keeping between 5 to 10% of cash. If I see any different opportunities on the market, or if I have some personal problems, I'm going to be able to use my cash and just use them in the proper way. And when I anticipate like a big down in the market, what I'm usually trying to do is to save even more money. So keep between 10 to 20% of cash to be able to buy the real great opportunity. Also, the position that I have that are really in the bloodbath and that I think that are going to do a lot of good things in the future, sometimes I'm just averaging down on those positions. For example, at the moment I have AQN that is down about 10%, I think, in my portfolio. So what I do, I just add some shares when I can and when I see like great opportunities on this stock. Oh, and guys, I'm always trying to keep less than 20 different stocks in my portfolio to keep it quite simple, also to understand and to know what happens in those companies, to know if they are going down, why are they going down, is it because of the company or because of the market. And also, the rest of my money, what I do with it, I just invest straight into ETFs, which could be a great way to diversify my investment at a low cost. And for everyone that haven't seen my last video on ETFs, I really invite you to check it out. It's just gonna be right over here. And if I come back to the Meet Kevin situation, I personally think that he's like a really successfully person. He successfully built a huge business and been able to scale it pretty fast. But I think that he did a mistake, because usually if you follow him, you have seen that he was highly invested into like high growth stock and like a lot of tech stocks. So he was really concentrate, and I think that he had some low diversification. So what he tried to do, I think, by selling his stock is to like make a new start and reset his portfolio to be able to see the opportunities that were potentially coming off in the market. But I think that he sold his portfolio too late, because we've seen that he just kind of panic sell, which actually make angry his fan. And I think that it was a bad decision by his part, and with all the amount of money that he does own, I think that he could potentially just invest into ETFs and he'd be pretty set for life. But personally, I'm really keeping it simple by investing small amounts every period. And guys, I want to know, what is your thought on the current stock market situation? Let me know in the comment section. And for everyone that is new, I invite you to join the Nord family by subscribing to the channel for only $0.00. And I will see you soon. Peace.